Gold's price seems to have hit a ceiling at the all-time high level of 2,195, yet it's still too early to judge whether the bulls gave up or are just taking a break after the steep ascent of the past week. Today we are to discuss the fundamental challenges laid ahead for the precious metal, while we'll be concluding this report with a technical analysis of gold's daily chart. On the ever-interesting monetary front, for gold traders we have entered the blackout period before the Fed's 20th of March interest rate decision. For the time being, the market's expectations are for the bank to start cutting rates in June meeting and deliver 4 rate cuts until the end of the year. The market expectations tend to weaken the dollar and at the same time support gold's price as they consider dovish. Yet Fed policymakers tended to push back against the market expectations, implying a degree of uncertainty on behalf of the Fed for the path of US inflation. It's characteristic that Fed Chairman Powell, in his testimony before the US Senate, recognized the need for rate cuts within the year, confirming the market expectations, yet also highlighted the uncertainty for the outlook of inflation. Overall, the release allowed for gold's price to reach new record high, as the confirmation that rate cuts are coming seems predominant. Since our last report, US yields tended to edge lower, polishing further the appeal of the precious metal if contrasted to US bonds as safe haven instrument. We expect that the inverse relationship between US yields and gold's price may continue to influence the path of the precious metal's price. Similarly, and linked in a more obvious fashion, would be the negative correlation of the dollar and gold's price, as the weakening of the dollar against its counterparts may have allowed for gold's price to advance higher since our last report. At this point, we note that the release of the US CPI rates for February later today is to be the next big test for gold's price. A possible failure of the US CPI rates to slow down materially could imply a persistence of inflationary pressures in the US economy, adding pressure on the Fed to keep rates high for longer and thus weakening gold's price. We also note the release of the US retail sales for February on Thursday as another release that could potentially create some volatility for gold's price. On an international level, we note that the regional tensions on a military level seems to remain pretty much active, increasing uncertainty in the global market. We note currently the war in Ukraine, the Israel bombing of Gaza, the Houthi rebel activity in the Red Sea and the Gulf of Oman, but also the less mentioned in media Venezuela intentions to annex large parts of Guyana, the unrest in Haiti and the tensions in Taiwan Straits. The overall uncertainty is also enhanced by the political outlook of the US, which hangs in the balance of the November presidential elections. Overall, we tend to maintain the view that geopolitical tensions provide support for gold's price, as they could potentially increase demand for the precious metal. After our last report, gold's price continued to rally, forcing us to recalibrate the resistance and support levels. For the time being, we know that the precious metal's price has marked a new all-time high at the 2,195 resistance line and has hit a ceiling before correcting lower in today's Asian session. In its correction lower, the pair has broken the upwards trend line guiding it, thus suggesting that a switch of the bullish outlook in favor of a sideways motion bias is in order for the precious metals currently. Yet the RSI indicator remains above the reading of 70, implying a continuance of the bullish market sentiment for gold's price. At this point, we would also note that the distance created between gold's price action and the upper Bollinger Band could also allow some room for the bulls to play. Yet for the bullish outlook to be renewed, we would require gold's price to form a new record high by breaking the 2,195 resistance line, and we set the next possible target for the bulls at the 2,250 resistance level. On the flip side, should the bears find a chance and take over, we may see gold's price sinking to its former all-time high level 2,135, now turn to support, breach it and thus pave the way for the 2080 support base.